Folks, welcome to Sunday Night Futures Live. The markets are open. I am late. I apologize. Let's get to it. Let's start it off with the sharing of my screen. And if I could get an audio check, I would really appreciate that. So I hope everybody's having an awesome Sunday. Okay. So what we're looking at here is the Franklin. Thank you very much for the sound check. Hope all is well with you as well. Okay, what we have here is at the open is we have a move up high on the E-minis. This is a 15-minute. And you had a pretty good close on Friday. So, bunch of stacks. Thank you very much. Appreciate that. A pretty good close on Friday. We held gains. Now, one thing I want to point out on this chart, again, 15-minute chart, is that they gapped this up at the open. A little bit of a two-sided action. And then at around 11:15, we rallied. Then for the rest of the day, for the most part, we just consolidated sideways. And we built a base from which we could easily pop up higher from here. Now, what we want to do is we want to know if we break the support level, because that would be pretty bearish stuff. At current, they're trying. My guess is that by the time we log off here tonight, we will have a successful. We will have pulled back, assuming that this 15-minute bar closes above this line, which will now be the color green. We will do a retest of that. Okay. They may just take this out already. Strong. Strong open here. All right, our alerts are set. We'll check back. Breakout or a breakdown. So we're now on a 5-minute chart. Let's take a look at the mid caps. They're at 1%. Gap up, thin volume. NASDAQ 100. Very similar to what you're seeing on the E-minis, the S&P 500. So we now have a new 5-minute bar that's opened up, new 5-minute higher high. Bullish stuff. We're up 0.22%. E-minis just took out the highs of the session. Just set up an alert on NQ. See if we hit resistance. Maybe we'll throw out a short in anticipation of that retest, and we'll just get out. We'll scalp a trade. very good price action here. I'm going to throw an order in to sell. If we come up to that resistance level. Again, going back to the 15-minute chart, what we're looking for here is just a quick scalp, right? So we have a breakout, which we're going to make the assumption that we're going to successfully do. We are at current now 8 minutes into the new trading week. So this bar will close out the next. After that, we suspect that we will get a pullback to the support level here for a retest. And if we are filled on the position, then we will exit stage right down at that level. Let's move on to the Russell 2000. Up fractionally here, but still a good consolidation on Friday. Let's go 5-minute view. Very, very tight Bollinger Band squeeze setup on a 5-minute chart. This is going to fire off in one direction or the other. We just don't know which way. So a lot of compression here, a lot of energy getting built up. Okay. So Russell floundering a bit. Let's go to the Dow. Dow is actually down fractionally. Let's take a moment. Let's go to comments and hello to folks. Paul, good to you. Larry, welcome. That's not bad advice. Sean, good evening to you, my friend. Michael, welcome. Oil futures today, you are thinking war in the Middle East. I'm thinking war everywhere right now. The incursion by the Ukrainians into the Kursk region is going to beget some turmoil. I have a headline to go over where whoever's running the government right now in the United States is really clamoring for war with Russia. It's utter insanity. But I'll go to that in a moment. Speaking of commodities, Mitch Curley, we're going to go to oil in a moment, so bear with me. First, we want to take a look at the dollar. The dollar is moving up fractionally. Let's check in with euro yen. Now, the reversal of the yen last week is what salvaged the market. Have no doubt it. I have a chart to go over in a little while, and I will show you the inverse correlation that exists between the NASDAQ composite triple Qs and the Japanese yen. They rely upon weak yen. So the yen is down yet again. Here's last week's price action, a reversal bar, but we are still in a breakout. That has not ended. No fair. I want to know if the yen puts in a new weekly low or low. That'll dictate where this market is going to go this coming. And why? Why does that matter for those that are not familiar? I think everybody's become familiar. I touched upon it a few weeks ago, the yen carry trade. Everybody's heard of it, but basically what is it? And I'll simplify it. It's fairly simple. You borrow in yen, which is basically near zero, and you buy stocks, bonds of the United States, Eurozone, or whatever, and you're making free money, especially if you're buying bonds. So that trade unwind last week, and that's why we saw the price action on Monday do what it did. Now, there's a lot of banks playing games out there saying that it's mostly unwound Japanese carry trade. That's ridiculous. The Japanese carry trade has been going on for at least a decade now. At least a decade. And you're going to tell me within 24, 48 hours you unwound all of that trade? I don't think so. So be careful here. Watch out for the yen. Let's check out the euro. The euro continued higher last week. Although it closed off of the highs of the session, at current we're down fractionally. Very nice validation. We're not going to be the least bit surprised to see this breakout higher. I drew this line last week, the week before, to represent the upper band of resistance. What happened when we hit it last week? We reversed. Know your levels. Know your price targets. All right, so the Russell 2000 just broke. Let's go back to the Russell 2000 for a moment. That is showing some relative weakness at the open anyway. That could change by tomorrow morning. So yeah, they're doing some selling here. Let's see what's happening with the NQ, which is looking really good only a few minutes ago. I know I get filled on my short, and they're selling that now. So I'm going to take that order off because I don't want to get that it's out there. So we're going to get rid of that order. Wow, they're selling it now. E-mini, same thing. This is a broad-based sell-off. So you have the Russell 2000, NASDAQ 100, and the Russell 2000, NASDAQ 100, and the NQ selling off. Interesting. Now they're going to do a retest here. Watch what they're going to do. They're going to rally. Watch. They're going to rally it back to this level here. Would have been great if I got that short filled. But I didn't want to short where I didn't have a level. My level was up here. Resist. So you got to wait. You can't just short into the abyss. You want to short into a level. I'm watching the volume here. I think they're going to rally this in a minute or so. What I'm watching is this bar here. And a lot of these widgets that I have, I'll be putting them in the members area. So you'll be able to use Thinkorswim, be able to add them to your indicator tools if you like them. There's lots of selling going on here. Not much buying at all. Lots of selling. Even though volume is relatively reasonable, it's about average. Bars, the bears are at current, this snapshot in time, in control. No new 2-minute lower lows yet. So I think that they are going to snap this back. I'm not saying they're going to break it out to new highs, but they are going to retrace back up to here. Well, ruthless. Net. Look at this, 93% sellers, 98% sellers. It's a buyer's strike. If they take out this low here, that's pretty bearish stuff before. I feel like buying right now. Just for a scalp. Okay. They're going to take this up. They're going to take it right up to here. Do they break it back out? We don't know that yet. There have been repercussions following UK riots, including a loss of respect for the police, injuries to officers, and significant number of arrests and charges. Do you see a carryover? What is, I think that the UK government knows they are in a lot of trouble. When you have a government that has allowed as many migrants into that country, it's not a big country, as they have, and you have a two-tier system of justice, and you merge cracking down on people that are posting on social media really benign stuff like retweeting and whatnot, that shows desperation. They're very, very afraid, and they're giving out sentences over in the UK for reposting a tweet. They did this example. This kid reposted this tweet from a government official who got in trouble for writing what she wrote. May have been a wife of a government official, and he got 3 years in prison. 3 years. That's not a sign of a confident government. That's a sign of a government that's totalitarian. And will they try that here? Well, they're going to take this up. So yeah, they could quite possibly do that. They're threatening to extradite United States citizens for doing the same thing. If you retweet, we already won our revolution against the British many, many years ago, twice, War of 1812 and the Revolution. So I think they're afraid. I think they're carrying out the globalist orders of totalitarianism, and I think they're afraid for their own survival. Talon, you're very welcome, Talon. My pleasure, my friend. Thank you for being here along with Franklin. Excellent partners in trading. I love it. Love you guys. TZ Burton, welcome. RK Newsbot, Israel's military intelligence and Air Force alert level amid the threat from Iran. That's still going on, yes. How does the carry trade hurt U.S. companies? It all comes down to liquidity, right? So if you have a certain segment, like for the big run up until the bear market of 2022, the markets rallied so strongly is yen carry trade, along with companies buying back their own stock. Well, companies buying back their own stock, that's really come in quite a bit. There's the yen carry trade that continued. So now that you have liquidity that was pumping up the equity markets here and the bond markets in the United States, that liquidity, some of it is now going home to Japan. Who else is going to buy? So it's not as if it's going to directly adversely impact companies in and of themselves, their businesses, but it could certainly impact their stock prices, if that makes sense. And I'm sure I'm not all that sophisticated, right? And I'm sure that somebody can come on here and articulate how it hurts U.S. businesses. And there could be an argument how it helps U.S. businesses. I'm not that sophisticated. I'll put that out there right here, right now. I just know how it impacts the equity markets, how it impacts the bond markets. And it all makes sense to me. So it looks like this is pretty weak price action here. I thought they would rally this up, and they did not. So if they take out the lows of the session, and fail to do a retest, that's pretty weak, because we failed to hit resistance, then we failed to check back and retest the support level. That's just test a resistance level, not a support level. That's really a lot of weakness there. Now, selling has really died down a bit here. So we have our alerts set. Let's move on with the rest of the show. We can always check back. All right, we did the US dollar, we did euro, we did yen. Now let's take a look at commodities. Light sweet crude. I thought somebody said light sweet crude was rallying earlier. No, it's not. Maybe they spiked up. They spiked up a little bit, then they since faded along with the equity markets. Let's check in with natural gas, which had a really good week last week. NG gapping up here, 2.5%. So the rally in natty gas continues, and we already have a new weekly higher high. Bullish on natural gas. Let's check in with precious metal prices. I think gold is going to start doing a lot of the heavy lifting for the markets soon. Perhaps not this week. Here's a 15-minute view. We are down slightly, but we are off the lows of the session. I'm going to set up an alert here. I want to know if we check back, do a retest support. Let's check in with silver. Silver down about 0.25 percentage point. It too is coming off of its lows. Let's go to a 5-minute chart. Potential W formation. Here is the left side of your W. Here is the right side of your W. Here is your pivot point. So W formation, if we rally up and through 27.57, the ounce, silver is looking pretty good for a rally. We own palladium. Let's see what that's doing. Down figures. I got to get out of that. Platinum. That's up fractionally, but off its highs. Copper. What did copper do last week? Down weak, retesting support levels. Let's check in with agriculture. One of our fellow members, Larry, had a good idea about doing a seasonality trade on agriculture. And I think we agreed upon wheat as being one and corn potentially being another one to buy. Corn up in the pre-market session. Soybeans continue their weakness, but at a support level. I think soybeans can rally here. Wheat, they tried to take it up. It has since reversed. But I'll tell you, this is looking good. This is last week's candlestick, not this week's, on a weekly time frame. So I already have the alert set up here. So it looks like we're probably going to be buying wheat, longer term trade, maybe corn, and for a shorter term trade, soybeans for an oversold bounce. Yes, please. Thank you, Paul. If everybody could hit the like button, 44 people out there, if I could ask you to smash that like button, I would really appreciate it much. It helps me out with the YouTube algorithm. What are yields doing? Yield up. Nice reversal bar last week on yields. And equities can continue up higher, even with yields rising up. You really don't want to see them handle, and you don't want a major move in either direction on yields, because that spooks investors when you get big moves in either directions on 10-year yields. I mean, last were plunging. That was not it. It was bearish. So watch yields. Watch the rate of change on yields. That's what matters. Potential 15-minute reversal bar on the 10-year. Okay, let's check back in really quick with what the NQ is doing. That's the NASDAQ 100 futures. Yeah, so they're coming back now a little bit. Yeah, so they're going to rally this. I want to see how this plays out, because I'll tell you, if they don't rally this when we break lower, it's probably going to be, we're already down a third of a percentage point on the session after being up a quarter percentage point. So let's check in with volatility. And you can see that volatility is now up over a half percentage point. You know, I don't worry all too much about stocks pulling back. You know, you buy those dips. VIX that begins to move up higher, validating that weakness in the equity market. I try to hunker down like a turtle in its shell. So beware here. Be very careful with this. All right, let's go to oh, I forgot to do this. Folks, we have the new trading community, the public forum, that is going to be opening up the 30th of August. It's a free platform. You're not going to be asked for a credit card, your email address, nor when you enter your, I'm going to send out a link to everybody once we are live. But when you sign up to become a member of the public forum, no credit card required. So we are launching this because we want a public forum. I want an area where I can post my older premium material so you can get a look at it, see if it's right for you. I want an area where we could populate stock chart requests rather than hunting them down in this string of comments. It becomes kind of difficult, and I miss some people's requests. So I don't like doing that. And I'll give you an example of what that's going to look like, because I created one. This is going to be the Contrarian Trader Public Forum. This is what your feed will look like. And every Sunday, this will be going out. And Sunday Night Futures Live stock chart requests. Give us your favorite. Here is my reply. We're not live yet, so obviously just one request here, and it's me. You could attach a chart. It's very much Facebook-like in its format. So enter your email address below, or barcode, a QR scan. that I have up in front of you right now if you're on mobile, and sign up free of charge. And a lot of stuff is going to be going on. In fact, our Labor Day Monday live stream, which is going to be in Sunday Night Futures Live because it's a holiday weekend, we'll be doing in this forum. So sign up now, join us there, and hope to see you on the other side. And again, use that link below. If you watch us on YouTube, link above if you're watching us on Twitter. All right, something fired off here. I want to see what happened. Oh, gold rolled over a little bit. Okay, so that was a gold alert support. And you can see that the NQ is weakening up here. Now we're down 0.36%. You're going to see, if we break these support levels, you're going to see volume pick up. We'll come back if they fire off. Remember, this is the 1 week anniversary from last week's sell-off. Let's talk about economic data that is coming out this week. It was a very quiet week last week. This week, we get the federal budget. Nobody cares about that. There is no budget. Let's face it, there's no budget. On Tuesday, this is going to be for the small caps. This is the NFIB Optimism Index, Producer Price Index. So it's going to be an inflation week. So we're going to get the PPI. We're going to get the core. We're going to get year over year. Then we're going to get the CPI on Wednesday. Again, core, and then year over year. Thursday, initial jobless claims. A lot of people will watch last week. That number, which is reported weekly, somehow or other caused the market to rally, despite the fact that the monthly establishment report, the non-farm payrolls report, has been spiking up higher. 1 week of a 7,000 job beat on jobless claims is not going to negate that. But the media took it and ran. They got everybody excited. Rah, 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 buy stocks, and you had a rally. Empire Manufacturing Survey, Philly Fed, lots of data coming out this week. Retail sales, a lot of data coming out this week. Industrial production. Consumer sentiment on Friday. Building permits, that's a forward-looking indicator for housing. Let's take a look at valuations. The PE ratio on the S&P 500 rear view mirror looking is 34.7. The Buffett indicator, despite last week's volatility, we remain overvalued. Earnings coming out this week. A lot of mid-cap, small-cap names coming out. Home Depot comes out on Tuesday. In the morning, we got some gold plays coming out. Brinker, that's a food company, restaurant chain. All right, just broke out. They're going to check back through this resistance level. UBS comes out, not a big deal. Cisco comes out after the close. Back in the late 90s, early 2000s, Cisco reporting would have been the equivalent of reporting. Now, nobody cares. Thursday, Alibaba, charting up very, very nicely for Alibaba. Walmart, JD.com. That's another Chinese stock. Golar, LNG. We own an LNG play as well. AMAT, Applied Materials, Semiconductor Equipment play after hours on Thursday. All that's worth talking about. Fairly quiet week in terms of earnings. So let's talk about what the hell happened last week. So we already went over this. The yen carry trade, it caused the equity markets to sell off because the yen screamed up higher. And oddly enough, the triple Qs closed up on the week and the yen closed down on. Why? It's because they're inversely correlated. I'm going to show you a chart in a moment. Now I'm going to show you another chart in a moment that's going to show you why the Japanese cannot stop raising rates. So we are not done yet. This is the beginning. This is the beginning, not the end. So this came off the wires. The great unwinding. Global investors reversed 3/4 of the year's carry trade. JP Morgan came out and said half of the yen carry trade in all of existence is now it's gone. Don't worry about it anymore. Nothing to see here. It's impossible. This has been for at least 10 years as yen carry trade. You're not going to wipe it out in less than 48 hours. Not going to happen. And the reason why the Japanese have to raise interest rates is that inflation there is worse than it is here. And this is just simply the price of gasoline priced in yen, not dollars, but in yen. Here, Japanese yen per liter. They're going up. And if they do continue to raise rates, what does that mean for the triple Qs and the S&P 500? Probably means more weakness unless we can find an equivalent number of buyers coming out of a different help buoy our market. So this is a ratio chart, Qs versus FXY. That's the yen ETF. Qs versus the yen. And you can see that the yen had been strong for 3-4 weeks, and the Qs, they traded down. The yen reversed to close lower last week, and Qs do it closed to close higher on the week. The inverse correlation here is undeniable. I'll draw it to a much finer conclusion. Let's go pure Qs. Let's get rid of the FXY. And then what we're going to do, we make sure this is set up right. Yep, it's right. Here is on a weekly chart. We can even do a monthly chart. There is a huge 82% inverse correlation between the triple Qs and the Japanese yen. So if you see the US dollar weakening and the yen strengthening because of the Japanese yen, or excuse me, the Bank of Japan increasing interest rates, that is going to put on the US market. But the CNBC and the mainstream media, they're going to post what JP Morgan says, what Morgan Stanley says, and they're going to say, nothing to see here, don't worry about it. That's why we're forming this public forum. I don't want to have shadow banned by YouTube, shadow banned by whatever social media that we publish to. It happens all the time. So I don't want to worry about that anymore. Moving on to what's going on in the equity markets that should have us very, very awake and alive, and that is the yield curve. The yield curve, when we went live on Thursday, was at the highs of the month. By the end of the week, it pulled back and allowed for equities to rally up higher. The question is, are we seeing a short-term peak in the yield curve? Are we going to pull back, or was Friday just a pause and now we're looking for a resumption of the strengthening of the steepening of the yield curve? We know that is adverse for equities if we continue to steepen here. So new monthly higher highs versus last month on a weekly time frame, just to show we did in fact ultimately pull back to close slightly lower on the week by 2 bips. Now volatility hit its highs last week since, we haven't been with those highs since March of 2020, only to close lower. Now the one's not changed here, despite the VIX showing very, very bearish price action by the end of the business on Friday. The one thing that still holds true is this: we have still broken out of a downtrend channel, which began, hell, back in March of 2020, oddly enough. So ever since this sell-off, we've been in a downtrend channel. Guess what? Now we have a breakout to our highs, and we held it. We're probably going to pull back and do a retest. The question is, does it hold? Does it reverse off of weekly support, or does it fail? Is there a rejection? We break back down into the trading range. It's not impossible. That's quite possible. So right now, we're still looking at a bullish breakout on volatility. Now, I'm more in the bull camp going into the new than I am in the bear camp. Why? Simple. Because we hit such extremes on the VIX last week, and then we backed off, as is the norm. Also, it's very, very hard to gate a bullish key reversal like this. Very hard. Meaning, when I say negate, meaning that this coming week, we're going to take out last week's lows. Probably not going to happen. Highly improbable. But if we do, brother, look out below. It's very unlikely that it's going to happen. But again, there's always the probability. And if we do, things are going to get real fast in this market. So I suspect that we are going to continue up higher here. We never did do a double top on the triple Qs. Perhaps that's what we're setting up for here and now. Easy Burton, thank you very much, my friend. Can't wait to talk to you on the other side. Bob, with all these problems around the world, then the elections, which people thinking we are going into recession, what do you think will happen? I can only go by, what history has shown us, right? If you get a reversal of a long-term trade, which is the yen carry trade, and you have a steep the yield curve, it's not a bullish. Those are not bullish events. I'll go to another chart here in a moment. Here, I'll skip it. This chart here is the HYG. That's the high yield junk bond ETF versus AGG. And it's more of a higher quality mix of bonds. And when you have high yield debt rolling over, which it did last week, it took out lows, but ultimately reversed. It's not good, because overlaid here in S&P 500, and you see what happens when the HYG really begins to underperform the AGG. People get scared. People get really scared, and equities get sold. So that this is over? Probably not. May we rally here? Yeah, sure, but I can do this. I can take my crayon out, because unlike the triple Qs, where we don't have a double top, we already have one here. Now, if they close this back down below this line here in blue, that means that the debt markets, the credit markets are in a lot of trouble. And they're already saying that we have a bit of a problem here. Now, the elections are critical. Will they be free and fair? And I think that's a major concern, especially here in the United States. I can't believe I'm saying. I think it's a major concern. And we're at a pivot point. We really are at a pivot point. Will the people accept the outcome of this election? The powers that be have done such a fine job of destroying the faith the public has in government that we're ripe for, I hate to say it, revolution, civil war. I don't think it's out of the realm of possibility. I hope to God not, but it can't be discounted. Just think about what's happening over in Britain. They're sending people away for 3 years to prison because they retweeted something. More of our inept, whoever is running the White House right now, we don't know who. Whether it be Obama, whether it be a staffer, whether it be the cabinet, who knows? Pentagon refuses to rule out strikes on Moscow in shocking exchange on Ukraine's incursion into Kursk. How long is this? I should have found this snippet. When pressed about the scenario of a direct attack on Moscow, she simply said, "I am not going to put a specific range on it." That's a threat. What's the goal here? What's the goal here? War before the elections? Then nationally surround the president or surround the elected nominee, the Democratic elect nominee? Don't put it past them. You can't put it past them. They think that this is winnable. Debt. It all comes back to debt, folks. There hasn't been one sell-off, major sell-off in the equity markets that has been dire with a VIX spike up higher, 40 and higher, without a credit event. It's always a credit event. So breaking U.S. credit card serious delinquency rates jumped to 7% in Q2, the highest level since 2011. Since 2022, these of 90, this is almost charge-off levels. Basically, at this time, 90 to 120 days, it goes out to a collection agency, and then they either file suit or they don't do anything. Either way, the banks have to write this debt off their books. They'll package it, they'll sell it to credit card agencies. They're not going to get zero on it. The credit card collection companies will buy it, but it's going to be pennies on the dollar. At the same time, auto loan serious delinquency surged to 3%, their highest level in 14 years. Currently, there are 600 million credit card accounts, 110 million auto loan accounts in the U.S., according to New York Fed data. That means 42 million credit cards and 3.3 million auto loans accounts are on the brink of default. Financial pressure on U.S. consumers continues to rise. And there you have it. Student loans not rising because you can't charge it off in bankruptcy. Inflation. We've been talking about this for the longest time. The fact that they closed down the Red Sea because of the Houthi rebels attacking shipping was going to cause shipping rates to skyrocket. And what have they done? Well, shipping rates are skyrocketing. Who pays this bill? It's not the Houthi rebels. We pay the bill. The consumer pays the bill. This is inflationary. Yet the Federal Reserve is going to cut interest rates in September. Add to that, this is from Brian Sullivan. I wouldn't have posted this, but Brian Sullivan's a pretty cool guy. He's a CNBC commentator. And he took the rush hour train home on Friday night from Manhattan to New Jersey. Took a rush hour train to New Jersey tonight, nearly completely empty. Nice for comfortable perspective, empty seats everywhere. Pre-COVID, this train would have been standing room, which was awful. That being said, how is this financially sustainable? What is he referring to? The commercial real estate market in Manhattan is a shambles. You have the equivalent of, I think it's 3 or 4 Empire State Buildings that are empty. Office space in New York City, empty. At some point in time, these banks are going to have to charge that debt off of their books because they're not going to be able to roll it over. Or the owners of these properties are not going to be able to roll it over because the properties are worth less and interest rates are higher than when they took out the debt 5-6 years ago. These are not 30-year loans we're talking about. These are loans that last between 3 and maybe 8. They have to roll over that debt. Think about how high rates are relative to where they were 5 years ago. All this is coming due soon. And all the Federal Reserve is going to be able to do between now and the end of the year is cut rates, what, 50 basis points? What's it do? Unrealized debt, unrealized losses. I believe that the bond losses, securities available for sale on banks' balance sheet, unrealized $517 billion. This is actually kind of old news. This has been out for a couple of months, but I wanted to revisit because it went on this. And after last week's credit scare and shock to the U.S. stock market, I thought it's time to revisit this and remind people of what the predicament is out there for the U.S. banking system. U.S. bankruptcies rise, Chapter 11's rise to a 13-year high. Is this a signal of a healthy and vibrant economy? I think not. It's only getting worse. Delinquencies are on the rise. What does that mean? This number is only going up higher. Consumer spending, on the other hand, consumer revolving credit declined by $1.7 billion in June, the largest consumer since March of 2021. Month over month, it contracted by 0.13%, the second monthly decrease over the past 3 months. To put this into perspective, in the 6 months prior to the 2020 pandemic, the U.S. posted just 5 months of revolving credit declines. Here's the chart. I'm not going to read all of that. But the rate on the average credit card is at 22.8%. Incredible. Lastly, this chart of countries in red are real wages. When you say real, that means adjusted for inflation, are less than what are prior to the pandemic. And you can see pretty much the entire Western world, not all, let me retrace that, because you have Britain, France, Portugal, they're still doing well. Poland doing well. Whereas a good portion of the West is doing horribly. Australia, New Zealand is really, really bad. United States, Canada, bad. So is this a sign of a healthy economy? No, it is not. Let's do some chart requests. Let me go to the members area to make sure I didn't miss anybody. Larry. Thanks. AMT. And don't forget, folks, oh, we just had an alert fired off. All right, so it's found its footing. This is the NASDAQ 100, back above resistance. Let's see whether or not we close there. Let's create an alert, letting us know if we close back down below support. So for those folks that are just joining in, I see 63 people now. If I can get 63 likes, I really appreciate it. And after the 30th, we're launching the Contrarian Trader Public Forum. That will be launching on August the 30th. Stock chart requests will be solicited in the forum, and I'll be looking here for those people looking for requests. I will be going to first. I still have to hold by a strict deadline of 7:05. I'd like to be logged off by. I need to get the members first, but so in the public forum, I will be going to you secondly and taking on your requests. So I have a lot of people on the waiting list. Sign up, please. Jody, my Lord, where have you been? I haven't seen you in weeks. On the grind, spy, you got it. See, I don't want to have to write these down anymore. It was just by luck that I look at that one. Cruising with JT, new sub here, market futures are ready. Well, welcome, Cruising with JT. Well, thanks for being here, my friend. Okay, I'll take a look at AMT for Larry, American Tower. Let's go weekly view here. It's very, very overbought. And you saw the reaction last week. I would wait for support levels to get hit. You can see by the heat map on TrendSpider. And by the way, TrendSpider technical analysis, link below, 35% discount code, or the different QR code I just put up there. You can scan it on your mobile. Yeah. And we hit resistance. We backed off. Let's throw up some trend lines here. Those are weekly resistance levels, monthly. As you can see, overlaid here on the weekly chart, I'm able to put monthly resistance levels in dash line resistance, and we will reject it. Now, what I suspect is going to happen here, coming week, they're going to check back to 227, give or take a dime. It'll probably pull back further. That much. Where would I look to buy? Right down here at this support level at around 219.70 per share. That's where I would be load a position or add to a position on AMT. Now, looking out longer term, I think we're going up higher. I mean, look at this consolidation. In fact, let's go to a monthly chart. Here's a monthly chart. Let's clean this up a little bit. Nice base. You have a higher low, and now we've broken out to a new higher high. New bull market. It's done. New bull market on AMT. I think it ultimately goes up higher. If your buy point, be patient. Let's take a look at SPY. Weekly view. Now you can see what we're able to do. Last week, they gapped us down below the prior resistance level on the SPY. And it managed to recapture, which is pretty bullish last week, and close there. Now, if they gap us down below the support level this week, then that's stage for this to happen. Let's clear up all these old annotations. All right, better. We could do one of these numbers where we go into a new downtrend channel. Only if we gap down. I don't know if that's going to happen. Not gap down. We could trade up. But if we close back down below the support, that's what could happen. So right now, the fact that we were able to recapture and close above a resistance level has me more short-term bullish than bearish, because I think that this is a fantastic candlestick. Very hard to negate. When I say negate, that means that this week we're going to close down below the support level. Probably not going to happen. Same thing I mentioned earlier with the Qs. Same candlestick, probably not going to close down below last week's lows this coming week. A month from now, who knows? September is very volatile. Let's go to a daily view. Now, daily view, I don't like this setup. And maybe saying, wait a minute, what's wrong with the setup? It's going up. The reason is that they dropped this like a rock. Then you had your short covering rally. And now what we've created is a dead cat bounce or a bear flag setup, whatever you want to call it. To me, for me to get along with this market, I want this. Let's overlay weekly support onto the daily chart. We just talked about this, right? I want to see a pullback and a higher low. Then I want to see the share of SPY, whatever you're trading, hold a higher low and then break out to new higher highs and close there. If that happens, I become far more bullish on whatever we're trading. SPY, a lot of these charts look the same. QQQ is going to look the same as the SPY. Same thing here. Bear flag setup. We need a pullback. We need a retest of support. It'll probably happen. As long as the yen doesn't go ripping up higher, then there's a strong possibility that we get a continuation rally here. We do have September, which is a seasonally rough month. Let's go to seasonality chart and take a look at how we're looking. Triple Qs going back 25 years. August is roughly 50-50. September is usually a down month for the triple Qs. So we're not seasonally favorable period of time where we want to get long. Now, November, completely different story. Even October to a certain extent. But right now, I want to be very, very careful with what I buy, if I buy. We're still holding shorts. All of my trades that I did a video on today are all long trades. It's published on YouTube. It's put on the website. So go check it out for the new trading week. But we're not heading into seasonally favorable period of time for the triple Qs. SPY, about the same in terms of performance as the triple Qs. So this is not a time to play cowboy, right? This to me is a dead cat bounce. We can easily fade here. And then if we take out last week's lows, we're going a lot lower. So cash is king. And don't, whatever you do, prior to the stuff last week, what they were doing is they were painting the tape. They were opening futures up bright green and then fading it. And I kept saying, don't chase the bright green futures. CNBC, they want to post them all over the place, get you excited, get you to buy the market at the open. Why? Because they want you to be liquidity for their advertisers, their big bank advertisers. They need a pool of sellers to sell into, and vice versa. If there's red futures, they're going to talk down the market. That way, those institutions come in, lots of liquidity, they'll blow out stops, and they go in, they buy stocks, they take it up higher. Didn't make it up. It's the way it was when I got here. Right? It's been going on way before the internet, way before CNBC. All right, folks. With that, everybody have an awesome and profitable trading week. Folks, don't forget, please, again, we're launching the new public forum coming out August the 30th. Requests for chart requests will go in here. The members will have a different area, and this will be your public feed, and we'll have some great conversations. I'll be putting out some of our premium content, which is kind of older, but you'll be able to get a feel for what it is and whether or not it's for you or you want to join up. And a lot of good things are going to happen. We'll be doing live streams, morning live streams, 7:45 a.m. And look forward to seeing you on the other side. Enter your email address below on YouTube, above on Twitter. At no point in time will you be asked for a credit card, and we do not spam. Have an awesome week. Franklin, thank you, my friend. Thank you for being here. Tim, welcome, my friend. Jody, thanks for being here. Have a great night. Enjoy the remainder of your Sunday.